the main thing like ETH did wrong and is just continuing to do wrong, at least from the foundation, like the foundation side, the core team, is just their actual technical roadmap, right? Why are they focused so much on decentralization? Like, why is there so much navel gazing? Why haven't they scaled the L1? I guess you can make this counterfactual that maybe they would have worked harder or tried better to scale the L1 if there was no roll-up centric roadmap. But I don't know, man. So I just like L2s saved us. They saved Ethereum, you know? Like no one would want to use mainnet otherwise.
Skale is the blockchain that is simply built different. Other L1 networks have costly transaction fees, clunky user experiences, and lack true adoption in AI and on-chain gaming. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Skale Network. That is Skale with a K. Hit the link in the show notes to get started. Hey everyone, Jason here. Wanted to talk about something that's been on my mind a lot recently. We should not be just recreating the TradFi industry. That's why I'm excited to share with you that today's sponsor, Magic Eden, is getting into token trading, and their vision is to become on-chain Binance and then much more as the entire world moves on-chain. Stay up to date with Magic Eden's journey by giving them a follow on X at Magic Eden. Tired of losing track of all your tokens? Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and more than 10 other chains instantly by using Uniswap's wallet today. Download it today. It's available on Chrome, iOS, and Android. Hit the link in today's show notes to get started. Welcome back to Empire. We got double guests coming in from Hack VC. You heard from Hack, from Ro from Hack the other day, but now we've got two other folks from Hack. We've got Alex Botte, and we've got Alex, the founder of Hack VC, who's been in crypto for a very long time. I think about a decade. Started Hack VC. They're one of the best venture firms in crypto. And then Alex Botte is a partner over at Hack as well. So Alex and Alex, welcome to the show.
Thank you. Yeah, this is our first time, I think. So it's good to be here.
Alex, why are you? I'm going to refer to Alex Botte as Botte, and then Alex, I'm going to refer to you as Alex. Alex, why are you doing? You're usually more like behind the scenes. I feel like. Why are you doing more podcasts?
I don't know if I'm doing that many. I think
why are you doing this podcast? I've tried to get you on the show for years. Why are you doing it now?
You're the first one in a few months. Well, we wrote this research piece a couple weeks ago. And Alex Botte, our head of research, did a lot of the data on it about Ethereum and modularity, which is like, you know, the number one thing that I think outside of meme coins that crypto Twitter rags on. Like, why is ETH underperforming this cycle? What's happening to my ETH bags? Am I getting poor? Is Solana taking over? And everyone's been blaming this whole like modularity thing. For why ETH is going down and sucking so hard. As a fund, we invest in a lot of this stuff. Like, we're tech investors, and it's all like really wonky deep tech. So we thought it'd be interesting to like actually do some data analysis and like some data-driven arguments instead of the tribal stuff that happens on Twitter all the time, to see if some of the claims were true. And so thought we would chat about that, like if ETH's doomed, is Solana the next king of all crypto, that kind of stuff. We can talk about other stuff too. But.
Nice. No, that's what I want to talk about, because it seems like, so ETH has obviously underperformed Bitcoin and Sol by a lot this cycle. And I would say if you asked people why that's happened, it's like in one sentence, it's probably ETH's decision to go modular was a mistake. And the way that they chose to scale and maybe I'm putting quotes around this, like fragment their ecosystem, was potentially a good decision for some reasons, but for the price of ETH, it was a bad decision. And so I'd love to, maybe we can explore that. But Alex, can I actually ask you, I'm sure most people are familiar with this at this point, but even just for my own memory, like just because you've been in the industry for a while, can you take us back? You've been in the industry for what, 10, 11 years? Like, what was the historical context behind Ethereum's move towards this more modular architecture?
Yeah, I started as a VC in the space in 2014. And back then, you would be amazed. And I thought Ethereum was the coolest thing. That's what got me excited about crypto. And you would be amazed at the number of people that, like, now everyone thinks of them as just like ETH maxis that were hardcore Bitcoin maxis at the time. So even being like really bullish on ETH was at one point like a contrarian trend amongst like Silicon Valley VCs and things like that. And once ETH started taking off, you basically, and Ethereum was like as monolithic as it gets, right? Especially back then. Like we're like, okay, we're gonna make this Turing complete blockchain. Anyone can write any application on top of it. And the concept of an L1 is monolithic. Like you just have to, you go here and we'll help you build, like you'll launch a token on top of us, whatever. But then the L1 wars started, and we VCs and like started just like investing in like every L1, right? Because that's and like retail individuals were investing in every L1, right? Because they wanted to catch like the next ETH. And I remember at the time, Ethereum just had an incredibly difficult time retaining talent and even money, because they did a small crowd sale in the beginning and they almost went bankrupt. So then now, like if you were an ex-ETH person, like, Gavin Wood was one of the co-founders of Ethereum, he started Polkadot, you could just raise hundreds of millions of dollars in an ICO or from VCs, and then you get to keep a bunch of your tokens afterwards too, right? So the economic incentive for retaining really good developers was just terrible. I think the last straw probably for like Vitalik, or I don't know about him specifically, but the Ethereum Foundation was near, because they had just announced that the way to scale Ethereum was going to be sharding. And then you got these like really great engineers, the founders of Near Protocol, who were from Web 2 and were like the sharding experts in the world. And I think they got a grant or something from Ethereum in the early days. And they were trying to attract them to just like do sharding for Ethereum. And they're like, nah, we'd rather just raise a bunch of money and launch Near Protocol or something, right? But there were a bunch of them, like Polkadot, all these other things. So they kind of had to figure out some way to bring talent back and get people to invest in ETH infrastructure. So I think that was the real genesis. Like back against the wall, you have to figure out a way to compete with these other L1s. And letting people run an L2 is like the way to do it, right?
Yeah, and then in late October, there was this kind of infamous post, which was Vitalik saying a roll-up centric Ethereum roadmap, right? Really, I feel like this is the post that kind of
was it infamous? Maybe today it's infamous. I thought it was pretty cool at the time.
Infamous is actually definitely the wrong choice of word. That probably is telling of like the timeline these days to use that word. This was one of the most impactful posts, I would say, on the Ethereum forums, was like this roll-up centric Ethereum roadmap. It was Vitalik kind of laying out what would this roll-up centric roadmap look like. And this was, in my mind, the start of when you started to see Ethereum move from monolithic to modular. I'm sure it had been happening in the quote inner circles before that, but this was the first time it like came on my roadmap.
Yeah. I mean, it was very influential in the sense that there were some L2s that were like, they weren't called L2s, but there were some L2s that had launched before like October 2020 and were building, but they were not like the early rounds of Optimism and Starkware and ZK Sync happened like in the 2018-17 period. But it was like incredibly unclear how they would monetize if they would ever be able to launch a token. And so they didn't raise that much money. Like investors weren't that interested. So after this blog post came out, way more people started building in Ethereum and invest. Like we changed our tune. Like we had already been doing some of these investments, but we doubled down. Like how could you not after you read a post like this? You're like, okay, great. Like Ethereum is going to open up and encourage infrastructure startups to like handle the execution layer, take MEV related profits, things like that. As like a startup, right? So it's like a compelling economic opportunity, and that's that's when this whole thing started.
So you guys wrote this article, right? Which was, or I don't know if it's an article or a research piece or whatever we're calling it. Was Modular a mistake? A data-driven take on Ethereum's grand vision. So maybe let's start and not really bury the lead here. I'd just be curious to get, I don't know if this is a question for Botte or for Alex, like, would you say that the modular strategy has hurt ETH's price? Like everyone says
that. Yeah. We did look at this, and the short answer is it has. Jason, you mentioned this, like the price action of ETH is pretty ugly. Like if you look at ETH BTC, it's down like 60% this cycle, that ratio. If you look at Sol ETH, tells a similar story, but obviously inverse since ETH is the denominator. That ratio bottomed at the end of 2022, right after FTX, and it's up like, I don't know, over like 700% since then. So yeah, this is something that we looked at in the paper. We looked at the relationship between fees and ETH price, and oh yeah, what's this? Is this
This is ETH BTC.
ETH BTC?
Just
Yeah.
a tremendously down only chart right now. Yeah, brutal. But up for a while anyway. Yeah.
Yeah, when was the top? Like it was like 0.08 or something in November of 21, maybe.
Yeah, the top was basically the top of the last cycle.
Yeah, and it's down like,
it was 1 month after the top of the last cycle.
Yeah.
Yeah.
So yeah, what we looked at in our paper, we found that over the past 3 years, the relationship, and this is like even before EIP 1559, but like over the past 3 years, the relationship between ETH fees, if you measure them in ETH, and ETH token price is statistically significant. Had like a, I don't know, 48%, 50% correlation over that period. And then if you look at the coefficient of that regression, how you would interpret that is if Ethereum fees fell by 1,000 ETH in a week, ETH price depreciated by $17 on average. So by like this whole modular decision of moving execution to layer 2s, the Ethereum L1 collects lower fees. Lower fees means less ETH is being burned. So you kind of reduce that deflationary pressure that previously supported ETH's price. So yeah, and then a whole other issue that we can get into too with short-term ETH price is now you have like all of these modular tokens that have hit the market and they're competing with ETH, both in terms of capital as well as mindshare. So yeah, we can definitely get into that more, but the short answer, Jason, is yeah, it has impacted ETH price in the short term, but we think like the long-term gain is like ETH's decision was focused more on long-term adaptability and ecosystem health rather than like immediately pumping the ETH token.
Got it. So your argument, it sounds like, is short-term, definitely modularizing Ethereum has hurt the price. Long-term, you actually think that Ethereum will end up doing much better than it's done over the last 2 years.
Yeah, the Ethereum ecosystem. Yeah, for sure.
This like decoupling of the ETH price and the ecosystem is definitely a big trend in our paper. It's like hard to avoid that.
Well, isn't that the kicker of the issue though? Is like ETH is doing well. It'd almost be interesting to unpack how you define doing well. Is it the price of ETH doing well, or is it that there's a bunch of TVL? Because all the TVL is still on Ethereum, basically. Is it the fees generated? Is it how many users are there? Right. So how do you guys think about like, how do you define what is the success metric for like, was modularizing Ethereum a good idea or not?
Yeah, we looked at like a concept of market share, basically, like TVL market share, fees, a bunch of other stuff. And the counterfactual, it's hard to like ever estimate exactly how poorly Ethereum would have done otherwise if they didn't modularize, right? But we did this, we looked at like we tried to look at like some Web 2 comps, for instance. Like, has there ever been a tech infrastructure company with network effects and so forth? It's a platform that just modularizes and like completely opens itself up and opens its APIs. And we actually couldn't find any that have done this like over a consistent period of time. Yeah. Like Facebook had a platform for a while. Twitter had open APIs. They all shut it down eventually. But we looked at like what Ethereum's market share had done over time versus some of these guys. And we looked like AWS, for instance, is very similar to Ethereum. It's like the centralized world computer, whereas AWS is like Amazon Web Services, right? And it was a first mover, whereas Ethereum is a decentralized cloud computer and it's first mover. And what you saw was like AWS's market share went down over 10 years from like basically 100% when it launched to like 33, 35%, something like that. And which is still pretty great. I mean, they're making $100 billion or so. But Ethereum's market share has, by most metrics, gone down from like 100% to something like 75%, right, Alex? Yeah. So it's like, could be way worse. Could be AWS levels, could be 35% market share. And then if you think about all the other, like there were many other, there were EOS, there was Polkadot, there were like Cardano. I don't even know if Cardano really launched much, but there were all these other things that obviously went like very, very low market share. So you have to imagine that from that sense, it's pretty good, even if it's like taking a dent out of the Ethereum price, like this whole modularity approach.
Yeah, I mean, I like you guys pose an interesting question here, which is what if AWS took a similar approach to Ethereum, right? Which is, I think I'll just read it. It says, what if what if AWS acknowledged that other teams might build some services better, and instead of doing what AWS did, which is, you guys had this nice chart, I don't know, this thing. Like these are all the services and products that AWS has built, and the reason you build so many things is to lock you in, right? Like we use AWS. And we get pitched all the time for other things. It's like, but it's just like they have everything we need. It's in AWS. So you guys pose this premise. It's like, what if you just let them build this open ecosystem? What if Amazon instead of built an open ecosystem? It's a really interesting idea. And they had prioritized composability and encouraged operability and all that stuff. And that's what Ethereum has done. The thing I'd throw back at you guys is like Amazon has done better than ETH, I would say. Like, maybe it depends how you define better, but like Amazon's a publicly traded company. They're one of the best performing stocks of the last decade. They spit off a stupid amount of cash flows. Like maybe their strategy is the better strategy. And maybe ETH should think about AWS's strategy instead of AWS thinking about ETH strategy. Either of you guys, I don't know who to throw this question to, but how do you guys think about that?
Yeah, I feel like if Amazon had done what we're saying, right, they would have lost out on like this massive revenue generating opportunity. But maybe if they had gone to like a more modular approach, their market share wouldn't be 35%. So I think like what you're saying is like, how do we measure success? But I think the other point too is like Amazon is a publicly traded company. They're not optimizing for the most vibrant ecosystem. They're optimizing for shareholder value. Whereas Ethereum is like, it's a decentralized protocol and it's optimized, like network effects are driving, is driving ETH as well. And so like market share might be a better way for like a decentralized protocol, like a way to look at it for a decentralized protocol. So yeah, I do think like the publicly traded versus decentralized is like a pretty important point when comparing the two.
Yeah.
I mean, it gets to this question too of how should these protocols be valued? So you can look at price today and say like, yeah, it's a function of supply and demand, and you stop burning all these tokens, and so the supply is like higher, it's less constricted, and that's bad. And that is like objectively true. But then you think about like, clearly assets in crypto are not valued based on revenues and profit multiples, at least to the extent that they are in public stock land, right?
Yeah, the comparison breaks down when you realize you're comparing a network versus a company.
Yeah.
Like, did you guys ever read the DBA post that John Charbonneau wrote about this? I don't know if you did, but it's like L1 and L2 token value capture. We'll link it in the show notes. It's a good piece, but it talks about like, there's this kind of like silly way that people talk about valuation today in crypto, which is like profit equals like fees minus issuance, or like, TVL, these kind of like pithy metrics or whatever. And there's probably other metrics. Like we, at Blockworks, we've been trying to kind of push like network TEV or network REV, like total economic value or real economic value. So there's like we definitely don't have the metrics that TradFi uses, these standardized metrics. That is definitely a thing that the industry needs to start to grow up. So.
Yeah, I'll just say, as an investor in the space that tries to back these early stage protocols, I think the easiest like shorthand I use for how valuable they will be is it's for the most part these projects are valued based on their TAM, which is like the total applicable market size. It's like a VC jargon term, which is, I guess, like, yeah, what the future expectations of it, right? Like, how big is the market opportunity for being the next digital gold?
Alex loves a good slide with some bubbles showing bigger bubbles and bigger bubbles.
yeah, 5 trillion, 50 trillion, like 300%, whatever, 300 bips of total wealth, like that's the market size. But one of the one of like the most famous VCs of the 90s is an investor in us, and he said that's exactly how it worked in the late 90s internet. Like everything, Webvan, bandwidth.com, the good stuff and the bad, Amazon, they were all basically valued on like how big the market opportunity could be, right? Things changed.
Yeah, but at some point you got to flip that into, I mean, the later you go in venture, right? Even like Series D or E or growth equity or whatever it is, like you start to flip into other metrics, right? Or you? I think you should, or maybe, or I'm wrong.
Maybe TEV, yeah, these metrics you guys are inventing, maybe. But those are kind of the same thing, right? Well, I guess TEV is a measure of current, like how much, current size of the ecosystem or something, right?
Yeah, that's the problem, is it doesn't bake in future stuff, right?
Yeah. I mean, like, I think the idea, probably over time, they'll be more based on revenues and whatever that is exactly. But even so, clearly, like, you have to believe the market is just like unbelievably inefficient for you to think that that's the only thing that should be pricing these cryptocurrencies. Like, I mean, I don't, it's how do I say this? But anyway, because like we think that like at least today it's based on TAM, valuing these things based on like success being based on the market share is to some extent useful. Like I think that's probably what a lot of people are looking at when they're trying to figure out how to price these things, and so are we.
Got it.
Yeah.
And Jason, I also think like the token terminals of the world have made it like super, like it's like almost like a copy and paste from TradFi. Like you see the balance sheet and like things just make more sense that way. But I think, like as the industry matures, we kind of need our own metrics. So it's great that Blockworks is doing that. Another thing we looked at in this paper too was like network effects are real. I don't know what you guys think about like Metcalfe's law, but it's kind of one way to quantify network effects. And even in Web 2 companies, like Facebook's price is like impressively related to the number of users on Facebook's platform, like over time. The R squared on that is like over 90%. It's not in the paper, but I've looked at that in the past. But then in Web 2, here's some stats on this. So Metcalfe's value is basically like the value of a network grows proportional to the squared number of users connected to that network. So you could like fill it in with number of addresses, which is what we did to calculate Metcalfe's value. And the relationship is super strong for all the majors. Bitcoin, ETH, Solana, R squareds are like 50 to 90%. And these relationships have persisted for years. And for Bitcoin, it's been like over a decade. So like this idea of like ecosystem, like the number of people, whether it's developers or users using a network, like is tied to valuation as well. And I don't know if like that's something that Web 2 stock analysts use when looking at Web 2, maybe they do, because it is incredibly powerful even for those like.
I thought it was crazy. I mean, Metcalfe's law is like a 30-year-old thing. Why should it have any alpha anymore? But it actually does.
Botte, just so I understand, what you're saying is you did this regression of Sol's price and Bitcoin's price and ETH's price as it relates to Metcalfe's value, and the R squared was high, which means, I think I might botch this, but it means that it's a good Metcalfe's law is a good predictor of price, which means in really simple terms that the more users come onto the network, the higher the price goes.
Yeah, that's a great summary. Like, what is it for Bitcoin? It's like 90% R squared. So you can interpret that as like 90% of the variation in BTC's price can be explained by the number of users on Bitcoin, on like the Bitcoin blockchain.
Does this apply to both? This is just the networks, right? This would just be L1s and L2s. Like this wouldn't be like Aave or Uniswap, right?
I haven't run it on apps, but that is like a good question. I mean, there's no reason it shouldn't work on applications as well, right?
The first principles theory is that it should apply to businesses or like that have very strong network effects, right? So if there's something that has no network effects, I'm guessing it would be a lot less relevant. I don't know, but
yeah, it's like the more businesses' success is reliant on network effects, the higher that correlation will be, or the R squared.
Yeah, probably. Yeah.
Okay. All right. Let's get on to the next part. So you guys laid out these like 4 you said the Ethereum modular ecosystem and its impact on ETH. We look at how modularization has impacted Ethereum in 4 different ways, right? So you had 4 ways that modularization impacted ETH. And some of these you said this was a good thing. Some of these you said this was a bad thing. Can you guys walk us through these 4 buckets?
Yeah, Alex, you want to do the first 2?
Yeah, the first one, the bad is like fees and price. So that's kind of what we talked about earlier, where like, okay, ETH has really underperformed. Is it at all related to the fact that Ethereum has basically given away some of its fees to L2s? And yeah, we found as you like continue to scroll down that that absolutely is explaining some of the underperformance for ETH. So oh yeah, sorry, even more, a little bit more. Yeah, these are just fees going down a lot. Oh yeah, this chart here, like looking at the relationship between fees and ETH price. So these are like, strongly correlated. So this is definitely impacting ETH price in the short term. And then kind of the next thing we think about was like, now you have all these modular tokens that are coming to market. Like obviously Optimism now has a token, Arbitrum, like even some of the data availability, like Celestia has a token now. So does that create competition for ETH, both in terms of dollars invested, as well as just like mind share too? So Alex, yeah, I'll let you talk a little bit about this as well, like this concept of spreading value across multiple tokens.
Yeah, totally. I mean, it's an issue for who you are. So if you're a founder of a modular coin or an early investor, you're pretty pumped, like, yes, your ETH bag isn't doing so hot, but Ethereum with its blog post, like just produced $80 billion of value. That probably would have, at least to some extent, accrued to Ethereum instead, or like, yeah, I don't know. It just wouldn't accrue to an Ethereum. And then the one click, like, hey, I want to buy ETH because this just gets me exposure to all the cool stuff happening on top of Ethereum. That goes away. Like, you now have to buy a basket of these like modular coins if you want to get that exposure. And that's a big problem with an asset, because you look at like Nvidia is riding way above its PE multiples and revenue, probably to some extent because it's just like this like it's a one stock like index of everything in AI. So if you're just like long AI, you can just buy Nvidia. Or you could buy, I'm sure there's like Fidelity, Vanguard mutual funds and stuff that are AI, and it's mostly market weighted towards Nvidia, right? So you lose that.
You're saying investors aren't asking, oh, does the value accrue to Facebook here? Does it accrue to Snowflake? Or it's just like if AI gets big, Nvidia gets big.
Yeah. But again, like, great for us, or like great for investors in these early modular projects. Not great if you're just like sort of passively holding Ethereum and hoping to get all the exposure to.
I mean, I think that's the kick. I think that's it, right? Like that is my analysis of why people are so angry on the timeline is the, ETH, like modularization has actually produced a ton of value for the ecosystem in that there's a boatload of money that got created. Like it's increased the GDP, I guess you could say, of Ethereum ecosystem. It's also, I mean, it's a really nice experience to like trade on Hyperliquid, which is on Arbitrum. Like it's like very, or, use Optimism, like use Base. Like it's a much better experience than using Ethereum a couple of years ago. The downside is that Ethereum used to be, quote, owned by retail. Now it's feels owned by VC because Celestia and Arbitrum and Optimism had to raise these monster venture rounds. So people are benefiting. It's just the VCs, not retail.
Yeah, I mean, which is kind of the point, because again, flip back to pre-2020, and there was this massive, like, there weren't many investment dollars going into Ethereum, and there weren't many, like, the quality of like really great infrastructure developers and engineers was really low. Like, people were going to build other L1s and things like that. So in that sense, it worked. Like, it was a gigantic bribe. I mean, it's not a bribe. It's an incentive system, Incentives are good. It was like an incentive system or bribe to get people to invest in and build in the Ethereum ecosystem. But it cost something. Like, it cost a lot. I mean, I don't know. It's like it costs, like, to some extent, 10 or 20% of the market cap of Ethereum had to go towards creating like economics for these people. But I do think to some extent it was a smashing success in the sense that like Ethereum has not scaled its layer 1, and there is no like subscale layer 1 today that has any usage whatsoever. Like if the choice for Uniswap or any new DApp of launch was like to launch on Ethereum, like the mainnet with like 40 to 50x max TPS, or Solana or Aptos or Sui at like 5,000 plus TPS, it's like no contest, right? Like obviously, even though there's a lot of lock-in and network effects and you like holding your ETH and your branding, whatever, right? You would still go to these other chains. And the existence of like layer 2 blockchains where the costs are really cheap and there are high TPS means that ETH is still in the game and still the number one, which, yeah, maybe it wouldn't have happened, you know, because like it was a failure. Like the Ethereum Foundation like really messed up the execution of the layer 1, right? I think that's like kind of objectively true at this point. And so the counterfactual will be really, really bad, right?
Yeah, I mean, do you think that they should have just... Actually, let's go to points 3 and 4, and then I want to ask hypotheticals. Maybe let's, I don't know who wants to take 3 and 4, but I can go back to...
Oh yeah, what are 3 and 4? I lost track.
3 and 4. 3 is its market. So, okay, so we covered short-term price, which is bad.
Yeah,
we
so
covered,
3
we covered the market cap
share. Yeah. And then 4, I would say 4, I'll cover 4. 4 is what I just argued, basically, which is like, at least it's still in the game, at least it's future-proofed. And what we mean by future-proof is like, in general, it's really hard for incumbents to lose in a high network effect business. Like there are banks and energy companies that are hundreds of years old and they're still kicking. And I'm sure the people running those things are not the brightest people in the world. And it doesn't matter, you know, like they just have such powerful like incumbency effects and first mover advantages and so forth. But the only way that an incumbent reliably gets killed is when you have like a big tech paradigm shift and you have this like generational leap, like when you went from desktop to mobile, it basically killed Yahoo. And like even like Microsoft to some extent fell a lot in consumer. When you went from like, I don't know, there was like lots of big shifts. AOL got killed, Yahoo got killed. There were these ton of tech giants that had 100 billion plus valuations that just went to basically zero within a few years because there was a big tech paradigm shift. Right. And yeah, there's these extinction events happening in crypto too all the time. The first big one was TPS, right? And so Ethereum did not stick the landing with TPS and scalability, but its L2s did. And so it was able to survive. And Alex, you want to do the market share one? I thought that was kind of cool.
Oh yeah, this kind of the market share one.
This is kind of contentious because everyone has a different way of showing market share depending on who they want their team, which team they're supporting, you know. But
well, how do you guys do it? TVL?
Yeah, for here we were looking at TVL, and Jason, I think you mentioned this earlier. Like if you look at market share by TVL, it's not even close. Like most of the TVL is all on Ethereum and its L2s. So I think like Ethereum plus all of its L2s is like 10x that of Solana, the TVL. And then even if you just look at TVL on the L2s and you don't even consider ETH L1, it's higher than any other layer 1 blockchain. Solana, Near, Bitcoin, Tron, whatever. So from that perspective, that's kind of where we're getting that 70 to 75% market share number. So ETH going from like 100% dominance to 70, 75% over 9 years. So that's like a little bit of the market share argument.
Could you say fees? It was pretty close, although fees have been kind of crazy in the last month or two for Solana.
Could you say, if I tried to argue the other side, could you say that is a symptom of a inefficient system, and you actually want to see a system with high velocity of money that's moving around in the system a bunch, and instead in Ethereum you have a bunch of idle capital that kind of just sits there in these big pools? Like let's look at DeFi Llama. Let's see who's got
possible. There's 10 counter arguments to it too, but yeah.
But I also think like I don't know, when I think of TVL, even if it's like large pools of capital sitting there, it's like where do you trust large sums of money, you know? And so I feel like Ethereum is the home for that because of like high security and hasn't suffered as much in terms of like outages and things like that.
Mm.
Yeah, I would say TVL and fees are the least bottable and like gameable metrics,
Yeah, whereas
right?
whereas addresses are completely bottable.
Yeah,
Yeah.
and DEX volumes are incredibly bottable.
Yeah.
Like,
Mm.
yeah, I mean, you look at like Coin Market Cap or CoinGecko for centralized exchanges, especially on these extremely low fee chains.
Yeah.
So there's signs of something, but you have to be really careful when you look at it.
Skale is the blockchain that is simply built different. Let's face it, other L1 networks have costly transaction fees that increase as the network gets busier. Skale has solved this problem with a gas-free, scalable infrastructure where users never pay gas fees. Skale was awarded the most active gaming chain in 2023 by CoinGecko and hosts 5 of the top 25 games on DApp Radar. You should definitely check out Skale. I was using it the other day. It really is incredible to use. That's Skale, spelled with a K. Hit the link in the show notes or head on over to skale.space/ecosystem to get started today. Hey everyone, Jason here. I wanted to take a second to break down why Magic Eden's getting into token trading. Their team is extremely concerned that crypto is still consolidated in the hands of a few centralized exchanges who act as gatekeepers, ultimately recreating the TradFi space. They believe that crypto is still missing an on-chain Binance, and their aim is to move trading completely on-chain, fully decentralized. They've done $6 billion in NFT volume in the last 3 years and have had more than 1.4 million users visit their platform in the past year, making them the #1 NFT platform in the market today. They are the ones that can do it. Stay up to date with Magic Eden's journey by giving them a follow on X at Magic Eden. Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and 10 plus chains, including Base, Arbitrum, Optimism, and more. Uniswap's wallet has built-in MEV protection and 0 gas fees with swaps that go through Uniswap X. You can also swap with the peace of mind that the code is completely open source and independently audited. Download it today. It's available on Chrome, iOS, and Android. Yeah. Okay, so there was this moment in time, right? You guys wrote about this, where there was EIP. This was 2021. There was EIP. I'm bouncing around a ton right now, but just ideas are kind of coming into my head. EIP 1559, where you had these excess fees paid to the network, resulted in ETH being burned. And everyone's like, boom, number go up. Like ETH is going to get burned like ETH to the moon. But then what happens is like you had L2s for execution, and you guys wrote about this. L2s for execution. Then you had like the DA layers like Celestia and Eigen and stuff like that launched, and they've grown. So then ETH's fees went back down, and so it's I think these are your words. By giving up core revenue generating services, ETH has now seen lower fees and lower revenues, which has impacted the price of ETH. So in 2021, we all thought, boom, ETH is going to get burned, number go up, but actually modularizing the stack like Celestia and the L2s and all that kind of stuff has obviously pulled the fees way, way, way down. So was there a moment in time where you know, if you're looking back in hindsight, like, oh man, they really could have done this differently or this differently and still kept with this modular path, but like fixed 1 or 2 things and that would have fixed ETH? I know we're totally like Monday morning quarterbacking here, but
I think there's a question of whether you should have done EIP 1559 at all, like whether you should have even. I mean, but there were benefits beyond just the fee burn for it. There were like composability benefits and usability benefits for the mempool. I just think that the main thing like ETH did wrong and is just continuing to do wrong, at least from the foundation, like the foundation side, the core team, is just like their actual approach, like their actual technical roadmap, right? Like why are they focused so much on decentralization? Like, why is there so much navel gazing? Why haven't they scaled the L1? But again, like hundreds of other L1s have made the same mistake, you know? And so in some sense, like I think the modular approach as a way to future-proof against if your own team or like if you're just like, if you're very self-aware, you're very humble, you think, oh, I don't know if we'll be able to like pull it off and execute as well as this other team. Like this is the right thing to do. You know, it de-risks like lack of execution, which there has been. I guess you can make this counterfactual that maybe they would have worked harder or tried better to scale the L1 if there was no roll-up centric roadmap. But I don't know, man. So I just like L2s saved us. They saved Ethereum, you know? Like no one would want to use mainnet otherwise. I mean, don't you think? Like,
yeah, but they could have spent the time. Look, I'm talking out of my depth at this point, but they could have maybe spent the time trying to make the best L1 instead of pushing higher up into L2s and stuff like that. That's probably the counter argument. But you have no idea if that could have. I guess I don't think they could have executed that because of the. I mean, you go talk to the teams. You go talk to the EF versus going to talk to someone like Solana. There's like it's like talking to two different industries basically. Like they're just two wildly different teams. So I don't think the EF was really set up to do that.
Yeah, I mean they could probably learn a lot from the Solana core team, you know. They executed great over at Solana.
I guess you did have that though. Consensus was the dev shop of Ethereum for a while, essentially.
They were like maybe the jump trading of Ethereum, or FTX, or we don't have to go there, but you know, like the centralized entity that was contributing developer resources kind of out of the kindness of their heart, kind of because they monetize some parts of it. But I mean, look, Consensus, they produced a lot of really great stuff, but I don't know. It's hard to imagine a fire dancer coming out of them the way that it did out of Jump, right? So I don't know. It's just like, maybe it's just not how they're built, right? Or what they're focused on.
Botte, what do you think? Are there moments in time when you look back at Ethereum and you're like, oh man, if they only did this, they'd be in a much better place today?
Yeah, I feel like the combination of like L2s, but also scaling and investing in the layer one itself, like maybe could have done those in parallel. I mean, the team was focused on like, right, there was a lot of other stuff happening with the merge and things like that. So that was impressive that they pulled that off as well. But I think like this whole L2 thing, like now you have all of these other developers, right, that are contributing to the success of Ethereum, and like even bringing in the best parts of other blockchains, which I don't know would have been possible. Like now you have all these alt virtual machines coming and building on Ethereum. We saw it with Movement, with the Move programming language, and like Eclipse with the SVM. So I don't know if that type of like innovation and development would have been possible if they just like would have focused internally on like improving the layer one itself.
Yeah. What do you guys think of ETH is money?
I hope so. Sounds great story, you know. I kind of think
there's two stories. There's ETH is money.
You mean this with a Yeah, go on.
There's ETH is money. Like actually, I'm just going to share this piece that this is a tweet from Constantine and Ryan Sean Adams. So it was Ryan goes, "I'm dead serious when I say ETH is money or the whole thing is pointless, et cetera, et cetera." And Constantine says the ETH is money narrative is stupid. Basically, he said ETH should focus on being the world computer. Do you guys have a thought on this?
I think when you say ETH is money, you mean it's like it's a store of value, right? It's one of these, not necessarily that it's a currency, right? That it has these like benefits that people really want to hold it for things outside of its like utility or whatever, right? And it could be a speculative store of value. You're holding it because you want it to go up, or it could be like more fundamental stores of value, like gold, or you need it to. You're like fleeing your country and it's war torn, all that stuff, right? And I think it's totally ridiculous to think that Bitcoin is the only store of value or has like the only store of value meme. Like every single crypto coin is trying to become a store of value or is trying to become money and has some moneyness property. Like that's sort of like from a very reductive perspective why these things don't and will never just trade on revenues or PE multiples or stuff like that, right? because they all have these like money-like properties, like even meme coins. I don't know. They're like these like speculative games, right? The people hold sometimes like you hold your Doge for years and years. And so like obviously everything in this space is money, or else the current valuations and demand for these coins don't make any sense. I wonder, like, does it actually matter whether the core like I just find these things to be sort of like from the yapping class, like the Twitterati, which we all are part of. So as opposed to anything that actually matters from like does that affect the tech roadmap? I don't know. Maybe to the extent that people are like, we just want to optimize ETH to be money, and so we're gonna like not scale or something. That's bad. I just don't know if it actually does. You know.
Alex, didn't we try to take a look at ETH moneyness in the article?
So many
like,
times. Yeah.
Yeah, I don't know. It's hard to quantify, but I guess like one way is like if you look at the layer twos, what are they using for ETH? Or sorry, what are they using for gas? Most of them are using ETH. On the DeFi protocols built on top of the layer twos, how much ETH is in those protocols versus stable coins or other tokens, even their own tokens, right? And it's still mostly ETH. So that's like one way. Like that's like a question of, is ETH extending itself on the layer twos? And
Yeah.
I don't know. It was difficult to measure, but we found mostly, yes, like greater than 50% of the DeFi apps built on layer twos have ETH, ETH in them, or are made up of ETH.
Yeah. Some of that's like maybe changing on the edges. I think Base recently, like you don't have to use ETH as gas anymore. You can use USDC instead or in addition. But yeah, like the fact that most of these layer twos let like the whole economies of these layer twos are run on ETH, and it was some stat that like on the vast majority of L2s, ETH is the number one TVL asset by like 10x greater than the number two TVL asset. It's like that is actually pretty compelling evidence that ETH is being used as money, right?
Yeah. All right, now we're kind of like just pontificating on things here. So start to get into, walk me through how you guys view like 25, 26, 27. Like what is the future for, I guess, what is the bull case for Ethereum as you guys see it right now?
Yeah, the bull case for ETH, I mean, well, I think they're definitely doing something right. I mean, we talked a lot about this whole market share thing, going from 100 to 75, better than some of the Web2 competitors that we looked at. I think they have like this first mover advantage, which is good. The network effect, like we talked about network effects and Metcalfe's law and kind of like TVL dominance. I think they also have like EVM and developer friendly, like the most like developer friendly place to start building in crypto. I am definitely not a technical expert, but Solidity, it sounds like, might not be the best language, but many devs use it. It has a lot of adoption, and there's a lot of tools and educational resources. So it's made ETH or its layer twos in the modular ecosystem a go-to place for new projects, and that's why you see like a lot of those alt layer ones maintaining EVM compatibility, like Monad and Barachain and Avalanche and some of the older ones too.
Yeah. I think you have to just look at the cool tech being built in the ecosystem. And for us, we don't really even think about exactly what the Ethereum Foundation is doing. It's more the stuff on the edges. Like a lot of the most interesting technology is like, you look at things like EigenLayer and restaking. They started and are primarily for Ethereum. You look at all these like alt VMs, things like Movement Labs, which is sort of bringing the Move language to ETH. I mean, there's even projects that bring SVM to ETH. It's like the stuff that's happening in ZK and privacy. Like, yes, like ETH doesn't have a monopoly on the concept of zero knowledge proofs or FHE, like fully homomorphic encryption. But the vast majority, by like 90% plus of all the interesting cutting edge ZK research is all being applied to either mainnet or to whatever the broader ETH modular ecosystem. And that's the future of this tech, right? Like that's like core cryptography that brings us forward another 10-100x on like many dimensions. So you have to look at that, right? Otherwise what? Yeah, that's the main story.
Do you think most developers will pick the existing L2s, of which I'd call them, ZK Sync and Optimism and Arbitrum, or are they going to pick some of the newer, I don't even know what to call these things anymore, but bear chain and movement and monad and EVM equivalent and whatever we're calling this whole bucket of new L1s coming out in 25.
I guess it's a similar trade-off to ETH for Solana too at this point. Like there's always, here's what I'll say, there's always more excitement from investors and there's more price action in picking the like the underdog, like the smaller cap coin or the new entrant that could become the old one. Because it's like a fun game to play to try to pick it, and there's more upside, right, in picking the new guy that's like a tenth the size. There's a lot more of that like than there is from developers. We find like you're actually like working 100-hour weeks for like months straight to ship something. You don't want to like excitement and the emotional aspect you want like are not as important, right? You want stability. So I think there's always this lock-in effect. But if there's like a significant amount of like they all have interesting stories for developers, right? Like Ton is actually one of the most interesting because it provides you a bunch like this massive amount of distribution, you know, whatever, right? Like hype too, and to some extent. So if you have this like really compelling thing you can offer developers or the users through developers, like you need that. It's not just about the next hot new exciting chain, I think.
Yeah.
Yeah.
So Bodte, yeah, go ahead, Alex.
No, I think the other thing, there's always this question of like yeah, will the number one, number two, whatever L2s remain that way? Will there just be like one or two L2s? Will there be like thousands of L2s? I think Vitalik had this quote a few years ago, like, yeah, there's either going to be two or three, or there's going to be like way more than 1,000.
Yeah. You see, so Deutsche Bank launched, or I don't know, Bloomberg headline, right? Deutsche Bank is building an L2 on ZK Sync. What are your guys' thoughts on this? Like, it feels like you could see the days of kind of general purpose L2s, like Arbitrum and Optimism, slowing down. I mean, actually, Arbitrum and Optimism maybe would agree with that too, because they're building like chains to build other chains, right? Like the super chain and stuff like that. But it feels like long term here. I mean, like every company could get their own L2 or own chain. What do you guys think of that thesis?
Yeah, I saw that headline too. I actually sent it to Alex before this podcast. Well, I think okay, so like don't Arbitrum, Optimism, Polygon, they all have kind of their like out of the box solution for you to copy paste, kind of create your own L2.
Yeah, ZK Sync, Optimism, Arbitrum, Polygon, they all do. Yeah. It used to be L3s and then
RAS providers too. Like
if
it's not them, it's
Gelato, Caldera. Yeah.
Kraken with Ink, right? Like I forget which one.
Ink is using Optimism Superchain.
Yeah. I don't know what I took away from that Deutsche Bank headline in particular is just like it's interesting that they chose an L2 on Ethereum. You know, like they could have built somewhere else. Like they chose Ethereum, and I feel like all these like TradFi, like even coming from the TradFi world, they want something that's going to be like highly secure and where there already is like a big network. And so I do think like Ethereum is going to be the place that they go when they're starting to experiment with like permissionless, truly like decentralized Web3. And we saw it with Coinbase, with Base, they chose Optimism, obviously. BlackRock, when they tokenized the money market fund BUIDL, they chose Ethereum. Even like Franklin Templeton, right? They had a tokenized money market fund before BUIDL, Benji, and that I think was on Stellar. But then when they realized like not a lot was going on in Stellar, they went to Polygon. And then I think Deutsche Bank is another interesting example of that. So I do think more chains, and they'll be like, Ethereum will be like kind of the first stepping stone for a lot of like TradFi and corporates via L2s.
Yeah. I think that's I mean, Alex, you were at 2 Sigma and AQR before this. It does feel like ETH is like pretty firmly planted, I would say, as like the chain of the institutions, like the thing that they feel comfortable with. I'm curious how I don't know if you still keep in touch with your old TradFi folks, but
yeah, I don't I would be shocked if they were like building something on
Well,
Ethereum.
maybe not
But
even building,
what,
but
no, yeah, no, I know.
like if
Yeah,
they deployed, like let's say AQR went and I don't know if they do any crypto stuff, but if they went and opened up a pool or like deployed on crypto in crypto, like would they do it in Solana? Would they do it in? I doubt they're doing it in like Movement Labs. Like I bet they're, I would assume they're just doing it on Ethereum.
yeah, I feel like there's going to be exceptions, right? Like, didn't PayPal like they chose Solana, right? Like they did
Yeah.
that whole
Well,
so
Andy, ETH and Solana, those are the two. Yeah.
so I think there's going to be exceptions, but I think it gets back to that same like TVL argument we were talking about before. Like you have all this economic security locked on Ethereum, and like maybe it's not moving around like a ton. There's not a ton of velocity, but it's like we're choosing it because it feels like the safer, more secure option. So I think that I feel like that is part of it. Like ETH being the TradFi chain.
The other thing at play here is like just the decision to roll your own chain versus launch your token on someone else's blockchain. There's a real adverse selection problem when you don't let someone roll your own chain. Like adverse selection in the sense that usually the best or the most ambitious founders or like the organizations that have very specific requirements and have to actually get those requirements done are going to choose to roll their own chain because you get to like control the economics, you get to control all sorts of like who gets to use the chain to some extent, right? And yeah, you get like sequencer fees and MEV. I mean, it's like no joke, right? So especially if you're like a corporate that can't launch a token, like Base, there's no way they wouldn't just launch just so like they get to get sequencer fees, and that's the way that their stock is valued, right? So there's no concept of like launching your own chain on Solana that you get to keep the fee, whatever, right? So over time that becomes more pronounced, right? Like Solana is going to lose these kind of organizations that really want to maximize on revenue and on fees to layer 2s or something like that, and or to like founders that want to like control their own ecosystem, right?
Yeah. What do you think ends up happening to Solana? Because I think there's a good argument to be made that everything ETH is going through now, Solana is going to have to end up going through, and it's probably the next cycle Solana will be in the place that ETH is in today. Curious to get your guys' predictions on that.
I'll just say I think like Solana is objectively crushing it. They're far and away the number 2 today. I don't mean that diminutive. I mean, the fact that could even be taken as like an insult is good. Like, and it sometimes flips ETH like on fees and DEX volume and things like that. And we have like this very like subjective piece of data, which is where are all the best founders building that non-VCs typically don't really get to see. I mean, you get to see it too, of course, but it's clearly like either Ethereum or Solana, and the number 3 is very, very far behind. I do think like, some of the rapid appreciation of Sol in 2023 was obviously because like people love buying a low val chain that can run further and run faster, right, than a really high value chain. But yeah, they've like out executed the EF by a mile. I guess in terms of the problems, like, Solana also has to think about how do you recruit the best infrastructure developers, right? And I think you're seeing this a little bit, like a lot of like longtime Solana people are sort of quietly leaving or quitting to start their own projects. Double Zero is kind of an example of this. It's like a very cool project to create the new internet, and it's a lot of people who used to be working on Solana. I get it. Like you want to like be a founder, a lot of economics to that. You can launch your own token.
Yeah.
How do you pay for developers? Like eventually Jump and before that FTX like can't like subsidize this forever, right? I actually think my prediction is that Solana will modularize pretty significant, like whether it wants to or not, it will modularize pretty significantly in 2025. Probably not to the same extent that ETH has, right, or as intentionally. But how else can it how else can it attract the best infrastructure developers? How else can it like experiment with like alt VMs and other approaches that the core team doesn't want to experiment with, right?
Will this be top down? Like, will this be totally saying we need to modularize, or will this be founders like Zeta Markets launch their own L2? Like, will this be just founders saying, "Hey, look, I'm launching an L2"?
I mean, I think that probably the thing that is the best about the Solana Foundation is how receptive they are to user feedback, right? So probably both, like they don't have their heads in the sand. They're not, they get it. They see the writing on the wall when it comes. But yeah, it's obviously bottoms up to start. Like, you have these like really great projects and dexes that want to roll their own chain. You have a corporate come in and say like, we need a sequencer or else, and then they're like, okay, well, we'll figure some way to work with you, right? There's some projects like doing this already. There's like projects to decentralize, like to build like a sequencer style roll up on top of Solana, like Rome protocol is something that does this, and they work pretty closely with the Solana dev team. So, it's a bit of both, right? Obviously, it breaks down the monolithic or composable, integrated, whatever the word is, narrative, but it's better than the alternative, right?
Yeah. Botte, do you have any thoughts on Solana next year?
Yeah, well, I thought it was interesting what you said, like in next cycle, if Solana has the same issues that Ethereum does, like what we're talking about, like, then they're going to have, if they go modular, something that we didn't discuss in this whole conversation is like the shitty user experience right now with modular. Like,
I saw you guys mention composability, Kyle, in the piece.
Well, Kyle, I mean, Alex talked about, he reviewed the piece before.
I saw that.
But like, so if Ethereum like kind of figures out all these UX issues, like it's a pain bridging from multiple chains and managing different tokens and stuff. Like maybe Solana is going to go through those same growing pains, and they can take advantage of some of like, I don't know, the tech or the cross chain communication or like the abstraction layers that are built for Ethereum. So maybe they'll go through the same. I don't really have a prediction for kind of whether they go modular or not, but if they go modular, like them going through the same growing pains that Ethereum's going through right now could be repeated too.
What do you think performs better in 25, ETH or Sol?
I mean, Sol's looking pretty good. I think it's hard to say between the two. Both of them have underperformed Bitcoin in 2024. Actually, I would guess the biggest winner, like whoever it is, the biggest winner, like from a ROI perspective, will be a new L1 that's trying to be a better Sol or a better ETH. We're probably going to start seeing like some better ETH too this cycle. And I would guess like, unquestionably, a major L2 will also outperform ETH in 2025 as well, right? I don't know. What do you think? Well,
for me, I'll say like I don't know, like a basket of Ethereum modular will outperform Solana. I don't know if it's for 2025.
Really? Like you think like some combo of like Arbitrum, Optimism, Celestia, whatever, insert your bags, whatever they are, like that will really interesting.
Well, I think like that's obviously like a little bit more complicated because how do you weight it, and like how often do you rebalance it? But I think some sort of like combination of those things,
or at least like a major, not like a really subscale coin, like a major L2, I'm sure will outperform Solana. Probably a couple of them, right? Again, I guess.
I mean, there aren't that many major L2s. It's like, I don't want to name names because I'll inevitably forget them. But like, there's 5 major L2s.
Yeah, I mean more coming, but yeah.
Huh. I'd take the other side of that. That's interesting.
All right.
I mean, the consensus trade in crypto is that Solana will outperform those. I guess just because they've been performing so poorly. But yeah, I think that's an interesting counter take. Is there something that's driving that, or is it just like, look, Sol's up 25x and most of the modular coins are like down or flat?
I feel like there is some mean reversion to it. I feel like things in crypto do mean revert, but I guess it's also a question of like market cap versus token like appreciation. Like you have all of these like new layer 2s coming to market, like a movement that just launched at $6, $7, $8 billion, like
Right.
from zero. Yeah, so it's like I think there's going to be like more of those coming to market, like exciting kind of token launches on L2s. So like kind of the 0 to 8 billion is pretty hard to beat.
Yeah, I mean, you also have like Mega and Monad and Bera and like, just a whole bunch of folks. So
yeah, totally. I mean, you even have like layer 2s that are SVM on Ethereum, right? So I think it's just like a bet on cool infrastructure and like Solana and the Solana core team not having a monopoly on that, right? Like, yeah, like something very interesting will emerge from this really cool technology, and the developers will really want to flock to it, and people want to buy it, and eventually probably having like dozens or hundreds of teams working on this and in their startup mode, like working nonstop, whatever, right? Or founder mode, whatever it is. Something like that. And also the fact that Solana is also really, really high already. Something between the combination of those two things should lead to some like pretty surprising results, I think.
Yeah. Cool.
It would be really weird if like it all stopped here. Like I don't, like, or just the Solana roadmap was the best thing possible,
Yeah, I don't think that'll be the case. I mean, I think we'll be funding L1s and L2s into eternity, basically. Like, I don't think I saw a cloud provider just raise 200 million the other day. Like, it's not like, we have AWS and Azure and GCP, so we're done funding cloud. Like,
yeah. Well, the issue is, actually, we were done funding cloud until AI happened.
Well, now we're back. Now we're getting a whole new cycle of cloud, like AI optimized cloud, right?
Yeah, and there's a lot more of those. Like when we say AI happened, there was some like crazy tech paradigm shift that changes things that, and you have to like reorient your technical architecture to make it work. And if you don't do it, it's like a 10 or 100x.
So maybe we fund L1s and L2s for another 5 years, and then we stop, and then quantum happens, and then we have to fund L2s again and L1s.
But like, there's a lot of good stuff. Like privacy would be cool.
I'm kidding. Yeah.
Another 100x improvement. Like, let's get 500,000 TP. Like, obviously, if we get an L2 that does that, or an L1 or whatever, like, I'm sure that would. Solana's gonna have to, and ETH are gonna have to compete or whatever, right?
Yeah.
I guess we're just so. I say this. Like the internet's like 40 years old, right? Maybe 50. And it's kind of, and I guess AI is part of it, but like before AI, things were getting pretty slow. Like all the value on cool infra was getting built by like 4 big companies. Now that's starting to change. So I'm sure that'll happen eventually. Like, but probably 20 years from now, right?
Yeah. Yeah. As we think about wrapping, any other contentious predictions for 25?
I think it's the optimism is probably pretty warranted around the US. I think there's like a ton of random positive convexity, like positive, insanely sort of surprising, but if you look at it in a grand scheme of things, not surprising things that can happen when the US is so incredibly bullish on crypto.
Yeah.
The Bitcoin reserve is like one of those. There's probably like 4 or 5 others on the horizon that could be like really, really good news. I feel like in crypto we're always predisposed. I mean, at least I'm predisposed to think that the good news is never going to happen. Like I thought like when Facebook was going to launch a blockchain in 2018, 2019, that was going to change the world. And then it, got shut down. Right. But it feels like the things happening in the US at least are like of that level or more, So.
Yeah.
Alex,
yeah. The only, this is kind of just an interesting kind of more like VC market thing, but like the VC market is still like very, very, very much below its highs in like Q1 of 22 in terms of capital deployed. So I think that's going to increase a lot and maybe reach prior peaks in 2025.
Yeah, it feels like that could actually be a cycle extender, in my opinion. Like if you look at the charts, we're way down from 2021, right? And way down from like Q3, Q4 21. And it feels like there's starting to be consensus that like, I don't know, prices will top in like somewhere between May to October of 2025. But the thing that I would argue could extend it is the venture money has been a little delayed this cycle. for many different reasons, regulatory, FTX, like a whole bunch of different stuff. Funds, just fund life cycles and raising. I think most funds are raising right now and starting to close their new funds right around this time, I would say. And so all of that deploying happens you don't deploy in 3 months, right? You got to call the capital, you got to deploy. So I think the deploying will actually drive the cycle a little farther than people are expecting.
So you think maybe the highs will be pushed more to like Q4, maybe even Q1 26?
I'm a horrible trader, so I would not listen to me. I mean, I originally was basically just I used to think it was probably fall of 25, like September, October timeframe, and then I started thinking like maybe it'll actually be earlier, and actually Roe started to convince me it'd be a little bit earlier, like May. And then if it's gonna be May, you might want to front run the people selling, so then it's like April or March. And then, but honestly, it's just not fun to think that way. You get too bearish, it's like we only have 3 more months of this cycle. That sucks. So I'm now reframing how I talk about this publicly to say this cycle is going to be extended. That's fine.
The thing is, some of that is baked in already, in the sense that historically most institutional capital comes in via venture and private markets, and that has like some effect, but not really that much on liquid markets. Like, I mean, it does eventually, but it takes a while to trickle through. It might take multiple years. And so you see this, like, if you actually look at like when the very biggest both venture fundraises and just like the big multi-hundred million, like the Definity round and the Telegram round.
Yeah.
This was 2 cycles ago. They all happened like mid 2018. Like
EOS was 4 billion in May of 2018. Like that's 6 months after the highs.
Totally. Yeah. And the biggest rounds by far were the ones that were like a week before Terra blew up. That was the easiest time. Then Terra was a bit of a, that caused a lot of stuff to happen to me. Like that was a bit of a shock. Yeah. But at that point, like Bitcoin was already down like 30% or something, right? So yeah, institutions are very slow moving, like even today you look at I'm sure you have like people on who talk about this, but the ETFs, they have very little institutional capital coming into them. It's mostly retail, it's retirement accounts, maybe some like registered investment advisors. The stuff like the pensions, the sovereigns, the really huge pools of capital have not really come into crypto yet at all. And it'll take a while for them to do it, like many months. So 100%. If they choose to. Yeah.
Alex and Alex, we can go forever. But I have to jump, and I know you guys do too. So this is great. Thank you guys for coming on. We will link the piece that you guys wrote about modularizing ETH, and was it a good idea or a bad idea, and the impact of it, and what the future could look like. We'll link it in the show notes. Yeah, thank you guys for the time.
Thank you, Jason.
Yeah. Hey everyone, thanks for watching today's episode. Just wanted to quickly thank today's title sponsor, Skale. Skale really is one of the best chain experiences out there today, and I've used so many different chains. There's a reason they are gaining so much adoption in both gaming and AI use cases. Hit the link in the show notes to explore the Skale ecosystem.